Hello, and welcome to another episode of the Markets at a Glance series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today, we're going to be looking at a couple of things, new developments that have happened in the markets over the course of the day. And once we understand this, then we'll be more prepared to trade the New York Open. So if you have any questions, feel free to type them in the live comment section, and I'll be responding to those questions right away. So hello, JSCode, and thank you for joining the session. I keep calling you that because I don't know your name. If you used your own name, I would actually use it. So thank you. So let's get this started. First things first, let's look at the breaking news. So the breaking news of the day, we had covered this early this morning in the market snapshot series. The US inflation surprisingly dropped to 4.0%. So I'm trying to share the screen so everyone can see this. So this is the biggest news of the day. US annual inflation has dropped from the previous reading in April of 4.9% to 4.0% in May. So this is a big journey that we've been following through, and it's almost like we have an inverse V-shaped reversal. So the inflation rate in the US was majorly rising in 2020, 2021, and some better part of 2022. But since around July 2022, we have been seeing consistent drop in US inflation month over month. And now we have one of the biggest drops. So inflation now stands at 4.0%, which is just about 2% away from the central bank target of 2.0%. So in this case, it's well in line with what Fed has been expecting. So the fears about another rate hike are getting smaller and smaller. So we know that the Fed basically started its meeting today and will be announcing its interest rate decision tomorrow. So in this case, the expectation that the Fed would go for a rate hike is now smaller and smaller. And there is a good chance that during the FOMC, they will choose to hold rates at the current level of 5.25%. And this will be the first time in over 10 meetings. So as a result of the announcement, which happened at 3:30, we have had quite a number of surprising reactions in the markets. So the number one reaction in the market is on the benchmark for the dollar, which is basically the dollar index, which jumped downwards to 103.0. So notice how yesterday the dollar was weak on the early trading, and then it managed to be really strong towards the afternoon and then closed here. But today it has been consistently moving down, went up for like 3 hours and then dropped all the way down after the news announcement. So this basically means one thing: if you are trading majors, then you basically go for buy positions as a result of the weak CPI report, which basically implies that the Fed may not go for another rate hike. So this is what we have been seeing in the markets, a lot of pricing in. So we are continuing with this journey, and there's a good chance we'll be seeing some higher prices for the pound against the US dollar. As for the euro, managed to break this trend line, pulled back for a retest, and then upon the news, jumped off the 1.07 928 price level and is now pushing higher. So we could be seeing even higher prices for Euro USD. So for USD CAD, it's a break below. It's the dollar losing to the Canadian dollar. So we are yet testing a low that was experienced yesterday as well as on Monday. So Friday, Monday, and now Tuesday, we are seeing the prices pushing down lower. So there is a good chance we could be seeing a break here, especially when we consider the correlation between the Canadian dollar and oil. And we know that oil has also been pretty impressive today. So after making some big sell-offs yesterday, we saw some signs of weakness with the 2-pin bars here. So towards the end of the day, managed to bounce off the 71.6 dollars per barrel. So today has been quite a green day for Brent. So we are seeing some impressive recovery. and this is expected to last for the next session. For the entire session. So there is a good chance we'll be seeing Brent continue to rise. Currently, it's up 3.16% from yesterday's low, and we could be seeing a complete full recovery. So remember, prices had opened here at $74.9 per barrel. So there's still more room or more upside for Brent oil traders. So if you're still holding this position, then based on the price action, there's still a chance that we'll be seeing some higher prices for Brent oil. So as for gold, it was the most surprising one. We expected a unidirectional movement. However, what we saw from the announcement is a big drop all the way down to 1947, a big spike all the way above 1970, and then getting back down here. However, the overall consensus is that the dollar is weak, so a good chance that the price of gold will continue pushing higher. So having breached the 1964 price level, which was a key price for us, now we can see the market pulling back downwards, and now it's retesting the 1964 again. There's still some more room for upside, especially considering that investors are now betting that the Fed will hold interest rates steady at 5.25%. So as for US equity indices, we are seeing the NASDAQ continue to rally, currently at 14,945. So still some more room for upside. The S&P 500 making a big jump higher, 4,365 currently. And of course, the Dow Jones index has rallied to that 4,182, and there's still some more room for some further upside. So far, so good. It's going as projected. So we will be looking for some further upside potential. So as for the Euro stocks, the Euro 50 index, after the announcement of the news, managed to cruise higher. So there still seems to be some form of correlation between European indices and US indices. So it's the same case for UK 100 or the FTSE. So clearly, after having traded sideways for a while, we just bounced off the lower trend line, and now you can see the impressive rally here. So there is a good chance we will be seeing the FTSE continue to move higher and maybe test the upper trend line here at 76.47 pounds. So that being mentioned, let's look at what else we can make and we can expect. So the day is not over yet, so we could still be seeing some more content coming up. So upon looking at the numbers keenly, we noticed that it was not just the CPI year over year, there was more data points. So CPI month over month, which is basically the movement between April and May, we saw a monthly increase of 0.1%. So we expected 0.2%, so the increase is much smaller, meaning that the US is rapidly approaching this inflationary territory. So the previous reading was 0.4% gain, which was quite surprising. So there's only a number of points or a number of times when we have had the US printing these inflationary numbers. So the first one was in April, May, and June 2020. Then we have here the month of January this year, when the US had entered this inflationary period. So this was a quite welcome data point for the Fed. And now, with the current reading being really small, then there's a good chance we could be getting to zero into the negative number, which the Fed is really looking forward to, so that they can achieve their 2% target. So with this in mind, we also look at the core CPI inflation numbers. So core CPI is basically the price of the normal basket of commodities without food and energy prices. So in the previous reading, it was up 0.4%. So in this reading, it was also up 0.4%, which was clearly in line with the expectations. So nothing much to see here. So it's a big win for the Fed. So now we await the next decision, which will be happening later in the day tomorrow. So that remains our next set of decision point. So if you want to go into details and look at the individual contributors to these, then I'll be sharing a link to the release so that everyone can go through it and judge for yourself by looking at the different CPI items and how they changed over the last 1 month. So clearly, you'll notice this November 2022, December, January, February, March, April, and May. And of course, the unadjusted 12-month ended May 2023. So overall inflation, all items is 4%. But then if you look at all these other numbers, you'll notice some key highlights. For instance, energy is down 19.7, energy commodities down 20.4. So this is gasoline here. And the biggest drop is fuel oil, which is down at 7.0. Of course, we have 11.0 for utility, piped gas service. So with energy prices really going down, then it has had a very good impact on inflation. So on one hand, the biggest gainer here seems to be transportation services, which are up 10.2%. Of course, we have shelter going up 8%. Of course, services, less energy services seems to be 6.6%. So it's time you go through it, look at the individual items so that you'll be able to project when we get to the next number for next month. So now that we are through with that number, going forward for the rest of the day, I will be expecting those trends to continue holding or dominating the markets. Of course, there's an important data point, which is the Bank of England Governor Bailey, who will be issuing a speech at 5 p.m. And then tomorrow we'll be having GDP from the UK coming up early in the morning at 9 a.m. And of course, the most important data point will be the FOMC economic projections. So there's also the measure of forward prices. So forward prices are basically the change in the price of goods, finished goods and services sold by producers, excluding food and energy. So this is a foods core PPI, producer price index, which basically is an indicator that shows what we might expect on the CPI on the next month. So this one will be coming up at 3:30 p.m., which is a couple of hours before the FOMC meeting and the FOMC press conference. So in this case, we could be seeing a further insight of where the direction of prices is headed, because we'll be having the producer price index showing us an indication of where consumer prices would be headed for the next month. So as a result of this, we will be looking at the Fed to react to the PPI data. So this also could raise similar volatility with what we just saw at 3:30 p.m. So the overall consensus is on one side, the Fed will hold interest rates at the current level. So FOMC statement and economic projections may describe the reasoning behind the Fed decision, and of course, describe what they expect to see on the next meeting in July. However, besides the three data points, 30 minutes later, after the announcement at 9 p.m., we will be looking at the FOMC press conference. So FOMC press conference will be very important in this case, especially considering that investors will be looking forward to try and understand the forward guidance of the Fed. So there is quite an expectation that the Fed could adopt a policy where they say that the next decision will be data dependent. But then if they decide that going for this rate pause is going to hold for now up until inflation gets back to 2%, then that would be quite positive for equities and negative for the US dollar. So the FOMC press conference will be more important than the federal funds rate announcement, since we'll get a glimpse of what to expect over the next couple of months. And of course, the Fed will be answering questions from journalists. And some of the questions that might come up is whether this is the highest interest rates that we are going to be expecting in the markets. And of course, whether they have achieved their target of pushing inflation downwards. And of course, whether there will be a rate hike on the next meeting in July. So a lot will be expected to be happening in the markets tomorrow. So of course, after this, we'll be looking at the New Zealand GDP, and then the focus shifts on two other central banks that are set to report on monetary policy this week. So we have the ECB reporting on Thursday at 3:15 p.m., followed by an ECB press conference. This should be happening at 3:45 p.m. And of course, on Friday, this is when we focus on the Bank of Japan interest rates, which are currently expected to be held steady at negative 0.10%. So that being mentioned, I think it's time we go back to the charts, understand what we are seeing, and try to understand some key price levels. So for USD JPY, we had mentioned something that in the morning that we will be looking at the breakout of this triangle. So the breakout has not yet happened. The market managed to spike all the way to the upper trend line and then drop all the way down to the lower trend line. And somehow we are still within this market structure that looks like an asymmetrical triangle. So still not yet a clear direction for USD JPY currency pair. So it would be very interesting if this pair was to break down lower, since it would be a very nice breakout trade following a market that is forming lower highs, higher lows at the top of this bullish momentum, implying some form of weakness in the chart and a potential drop back downwards. So there is a good chance you could be seeing price drop further downwards, especially when you look at the current 4-hour candlestick and how it's clearly indicative of bearish entry. So as for gold, we are seeing a lot of whipsawing here. So nothing much can be captured from here. However, there are two extreme prices that are quite relevant for us. One is 1964. A break above 1964 will get us back to 1970 price level. However, some further downwards pressure, then the target remains 1953. And of course, further downwards goes to 1938. So for now, we just be patient, observe the price action movement. And then once this happens, then we'll have simpler goals to target following the kind of whipsaw that we just experienced about 30 minutes ago. So for Audi USD, continued momentum upwards. So whenever there is such momentum, sometimes it's better to stay on the sidelines, wait for a pullback and then make your market entry. In some other times is more important to just go for immediate market entry. So the most resilient index of all indices seems to be the US Tech 100, which is up way over 35% since the beginning of the year. So price opened here at the beginning of the year. So far, this is what we are seeing. Just a moment. Trying to estimate here. So the index is up 36%. So in the last 20 years, there's only 5 times that the index has really gone up like this. We have seen it happen in 2003. It happened in 2009. And of course, it also happened in 2013, 2019, and 2020. So in this case, it's a market beating return. We haven't seen this a lot of times. So having seen the Nasdaq really go up this way, so there is a good chance that we will be seeing some form of profit taking eventually happening in this chart. So as per now, it remains bullish. We don't have to fight the trend. But if we happen to see any signs of weakness, then in that case, we might consider going short. As per now, it's only bullish momentum. So any form of pullback might be taken positively for a market entry. So US 500 also indicating bullish momentum. US 30 bullish momentum. And I think the most important play for the week remains the Brent oil prices, having bounced off the 4-hour chart, a major support level that has been holding for quite a period of time. So having bounced from here for the third time in a row, it seems like it's a very solid support. And of course, our target is now in sight. Our target right here is a previous price level that was acting as support around $74.9 per barrel. And if we breach this area, then we go for 76.49. And of course, there's more targets into the upper side at $77.54 per barrel. So it's a very impressive recovery. If you manage to capture this in the morning, congrats. And hopefully we'll get to see more upside happening from this particular chart. So a very good question. Are Audi JPY and New Zealand JPY charts similar in some way? Yes, they tend to have a very strong correlation. So on one side, the counter currency is the same. It's the Japanese yen. So if something was happening in Japan, let's say there's something that has strengthened the currency, then both New Zealand yen and Audi yen would tend to be going downwards. So on the other hand, Australia and New Zealand are neighboring countries. They tend to have very similar economies. So whenever one is strong, the other also seems to be strong. So there's a positive correlation between Australian dollar and New Zealand dollar. So when you compare Audi yen and New Zealand yen, then you get to see very similar trends. So if you are trying to focus on risk management, then you should know having positions in both basically expands your risk, doesn't diversify well enough. You are trading two correlated assets. So it's more or less like taking a double position. So another good question, how will the finance bill 2023-2024 affect the core CPI in Kenya if VAT is increased to 16%? If VAT basically goes up by 16%, then the overall prices will tend to go up. So of course, the CPI is expected to rise higher. However, this will not affect the core CPI. It's expected to affect the overall CPI, which also includes food and energy items. However, if the overall CPI goes up, then the following effects also tends to affect the core CPI. So yes, if the finance bill is implemented and VAT is increased to 16%, then as a result, we would be seeing much higher prices for things like transport, manufactured products, imported products, and all that will basically translate to a bigger burden on the Kenyan consumer. So that's it for today. Thank you very much, guys. I can see a request to check on USD JPY. I believe I already did that. So I mentioned that we are within this triangle. The market was unable to break the lower trend line. So we remain trading within this triangle. And I think the best opportunity will come once the market breaks out of either this trend line or this other trend line. As for now, it remains more as of a sideways momentum. So since this period here, we can say that this market has been moving this way. Let's say this is the overall price direction since this day to today. So with this in mind, then it means the market is just moving sideways. There's no direction. The only time we identify a direction is when the market eventually breaks either of the trend lines. So for now, it's a very tight market with low volatility. I would wait for volatility to break in either direction. So thank you very much, guys. Thank you for your time. And I hope to see you on the next session tomorrow on Wednesday. So tomorrow we'll be having a guest. We'll be having one of our education partners from Uganda, Kampala, joining me on the session at 11 a.m. So expect some more fireworks and better analysis coming from the both of us. So hopefully we'll be able to give you more insights and maybe better analysis of what we've been doing and what's currently happening in the markets. So thank you guys, and I hope to see you on the next one.